Ever wondered what happens to your hard-earned money if the investment platform you trust suddenly disappears? It's a scary thought, right? Especially when you're investing with a digital wealth manager like Stashaway. You see those sleek apps, the promises of growth, and it all feels so modern and convenient. But in the back of your mind, a little voice might whisper, what if they go out of business? It's a valid question, and one that every savvy investor should ask. After all, you're entrusting them with your financial future. So, let's pull back the curtain and explore what actually happens to your money if Stashaway were to cease operations. The good news, and this is crucial, is that your money is not held directly by Stashaway. This is a fundamental principle of well-regulated investment platforms. Think of Stashaway as the orchestrator, guiding your investments, but not the custodian of your actual assets. They operate under a strict regulatory framework that mandates the segregation of client assets from the company's operational funds. This means that Stashaway uses robust, globally recognized custodian banks to hold your money and the securities you've invested in. For instance, your cash deposits might first go into a trust account with a major bank like DBS Bank, and your purchased securities, like ETFs, are held in a separate custodian account, often with an entity like Saxo Capital Markets or Lion Global. Why is this important? Because it creates a protective barrier. If Stashaway, as a company, were to face financial difficulties or even go bankrupt, their creditors cannot lay claim to your assets. Your money and investments are in segregated accounts, entirely separate from Stashaway's own finances. This segregation means that in an unlikely bankruptcy event, your money held in these trust or custodian accounts simply cannot be touched by Stashaway's creditors. You retain full ownership and access to your assets. The process would involve your assets being transferred from the existing custodian to another regulated financial institution, or you might be given the option to liquidate your holdings and have the cash transferred directly back to your bank account. The regulators and the custodian banks are there to ensure an orderly transfer or return of your assets. Stashaway is licensed and regulated by financial authorities in the regions it operates, such as the Monetary Authority of Singapore, MAS, or the Securities and Futures Commission, SFC, in Hong Kong. These regulatory bodies impose stringent requirements, including capital adequacy, compliance, auditing, and reporting. These regulations are designed precisely to protect investors like you, ensuring that platforms like Stashaway adhere to strict rules regarding client asset segregation and financial stability. So, while the idea of an investment platform going out of business can be unsettling, the structure and regulations in place are designed to safeguard your investments. Your money isn't just floating around in Stashaway's general accounts, it's held securely by independent, regulated custodian banks. This separation is your primary layer of protection, giving you peace of mind that your financial future is not solely dependent on the continuous operation of the platform itself. With that said, thanks for watching, and until next time.